So I think the most important thing, and Peter at Lazard, our CEO, talks about the context of contextual alpha and understanding the impact of events like that are unfolding right now, and how does that impact the broader context. So as an emerging market investor, we understand the cost of capital is born here in the U.S. and understanding that context around the geopolitics, where inflation expectations are. When I see that kind of context playing out in emerging markets, we're really constructive, the asset class. We see positive real rates. We see that liquidity measure better. Quite frankly, the banking systems across most of the emerging markets are very traditional in nature. We don't have a lot in terms of private credit and non-banking financial companies.
We've really seen emerging markets perform so well over the last year plus. How much of that has been the weakness of the U.S. dollar versus maybe improving earnings, just better business prospects, geopolitics in general?
So, Paul, I think what's really exciting is that emerging markets just finished 10 years of famine, and we're in an 18-month period where EM is kind of getting a little bit of its mojo back. What's really important is that this is not just purely on weaker dollar, which obviously plays an important role in terms of global stimulus because long-term liabilities are denominated in dollars, but importantly, there's foundational change. Emerging markets is no longer the monolithic story of the past. We have AI opportunities that are taking place. I mean, as we know, many leading semiconductor companies, Korea, for example, is up 50% year to date. They're a key component of that. And at the same time, the debate around AI and disruption is impacting some of the service areas.
Should we do a victory lap on this?
Sure.
Rohit was way out front on this.
Yep.
I mean, you were in here months and months and quarters ago saying this is different. Why is Korea tripled?
Yeah, good question.
It's a couple of things. First of all, the local populace are equity owners of their companies, right? So they essentially are greater participation. We're seeing their flows picking up. We're seeing corporate governance reform. They just announced this week plans to improve treasury shares in terms of cancellations. And then the most important aspect is the focus on R&D and investment. In Korea, we've seen this development, particularly around memory, which has really helped the leading memory companies that are key components of high bandwidth memory that goes into our AI servers today. The other aspect, which I think people are getting excited about, is this aspect of robotics and humanoids. And you guys had an interesting piece yesterday looking at the Atlas robot by the Hyundai Group and how does that compare with what Tesla's doing. The context is that you had a very low valuation starting point, and at the same time, foundationally, there's investment happening.
You see that Rohit is pounding the table. Did you hear that?
There you go.
Rohit did that.
This is their time in the sun. Damien Sassower's been saying the same thing. Got time to really pay attention to emerging markets here. China, what is your world doing with China these days? For a while, it was almost uninvestable. Now it seems to be coming back. How do you guys think about it?
Yeah, so I think that the exciting thing about China is that there's no one China. Okay. It's no longer just purely based upon fixed asset investment and property development. That area is still quite challenged. But what's exciting is what China's doing in terms of energy security, what China's done in terms of AI, renewables, EVs, right. As we talked about, over 50% of vehicle sales in China today are EV. They're also exporting. So that context in terms of them moving towards right. The fourth industrialization. And at the same time, we've seen a lot of development, particularly around the AI, the natural language processing that's occurring, that China's also playing in that global race.
Rohit Chopra with us. He's EM Equity Portfolio Manager at Lazard Asset Management. Can we massively rip up the script?
Yeah, let it rip.
Okay, I'm going to editorialize and say that under the leadership of Peter Orszag, who's been way kind to me over the years, Mr. Orszag has reinvigorated the academics of Lazard. The brain power coming out of your shop is just jaw-dropping. Is AI transferable to the EM economies? I get it that AI works in Silicon Valley. It works at Northwestern in Chicago. Does it work at Duke? I think
sure,
it works at Duke.
Time.
It works at Duke. Does it work in Malaysia?
It works because it is a tool right now. It's leading to productivity gains. It's about understanding the data. But what's also a fact is that AI will be highly disruptive as well. We're seeing some of those, the debate, for example, I just came back from India. There's a big debate, particularly in the IT services industry, where a lot of these companies were benefiting from lower cost labor and IT right. expertise. And now, potentially that code is going to be written by AI, and that can be disruptive.
Okay, the heart of India is Satya Nadella coming out of Bangalore and down south, is it Tamil
Tamil Nadu.
Tamil Nadu. How are they adapting to AI in the heart of Indian technology?
Yeah, so it's a wake-up call. I think the first thing I'd say here is that if you look at Indian corporates, historically, they haven't invested as much in terms of R&D spend. So R&D spend in India has been relatively low. What you're finding with the tariff discussions, that there's been a whole focus on how do we improve our R&D spend, how do we improve our manufacturing capability. So there's definitely a sense of urgency. I do think these business models will change. But at the same time, as companies adopt AI, you need the Indian IT service companies to help push through that integration.
Get one more in here.
In the world of emerging markets equities, where do you guys see maybe the best value? Given now you have had some movement here.
I think the best value in emerging markets today is Brazil.
Brazil. Okay.
I think
Brazil.
that, yes, you have the benefit of weaker dollar. You have strong commodity complex, inflation under control, and most importantly, real rates are amongst the highest in the world. Base interest rates at 15%. I think that starts to come down as inflation comes down, and that's going to start to drive a growth cycle. And that's going to be, I think, a big surprise to investors that they see growth improving there.